around this idea of fiscal policy and the idea of taxes, I want to take a quick glance at how economists view different types of tax regimes. We'll start with two people. Let's say we've got Alice and we've got Bob. Alice happens to make $20,000 a year. Bob makes $50,000 a year. So if we have what's called a proportional or flat tax, then Alice would pay, let's say, $2,000 a year in tax. Bob would pay $5,000, at least in terms of income tax. This means that it's a fixed percentage, in this case 10%. An example of this in Canada would be the GST. Goods and service tax is 5% federally. Provincially, there's a PST, provincial sales tax. Quebec, it adds up to 15%. If Bob were to spend all of his money, $50,000, go buying stuff, then he'd in fact be paying a fixed percentage. So would Alice. Now, there's a few exceptions for this. One is there's a GST refund. So that means to say, at a certain lower income level, people are entitled to. You get a GST refund, I think, every 3 months, as an interesting feature of the goods and service tax. Secondly, there's exemptions. A lot of food, for example, is exempt from GST, and rent also is exempt from goods and service tax. So this changes or alters it and makes it a little bit more, as we'll see in a second, progressive. A lump sum tax. This is the terminology to use. Either proportional. A lump sum tax is sometimes also referred to as a head tax. It means it's a fixed sum for everybody. It doesn't matter how much money you're earning, you pay the tax. Some examples of this in Canada would be, or in Quebec, would be the Hydro-Quebec bill. Almost everybody's connected to Hydro-Quebec. So the fixed sum of money you have to pay to, or your household at least has to pay to connect to the network, it can be considered a lump sum tax. Driver's license too. Almost everybody has a driver's license, and so in effect, everybody has to pay the fixed sum of money to get this. It doesn't matter how rich or poor you are, you pay this. That's a lump sum tax. A progressive tax means that the percentage increases. So, for example, Alice pays $2,000, but Bob pays $10,000. The percentage increases with the income, and this is how income tax in Canada, for example, operates. Finally, there's something like, because a regressive tax is a tax where rich people, in effect, pay a smaller sum of money than poor people. And I don't know, examples of this would be maybe lottery tickets. I don't know, rich people buy fewer lottery tickets than poor people do. I always consider a lottery ticket as a tax on people that are bad at math. Cigarettes. Do you think, returning to our comparison, the idea before, are cigarettes an inferior good or a superior good? That is to say, as a person's income increases, do they spend proportionally a larger share of their, or as a person's income decreases, do they spend a proportionally larger share of their income on cigarettes? If so, then cigarette taxes are very high, so we could consider that maybe possibly a regressive tax. I want to look at something else very important, this concept of a marginal tax rate. This is rather difficult to grasp, but we've seen it before in the context of this idea of marginal, very important in economics. We've seen it before in the context of a bus pass, for example. But if you study economics further, then you'll see this term marginal returning often. And in mathematical terms, it refers to the derivative of a function. In the case of taxes, though, it's an important concept to grasp. Imagine we look at Bob. Okay, Bob was earning $50,000 a year. Now, let's say he now earns $70,000. He gets a promotion, increase in his salary. Now, I mentioned earlier, using the example of a proportional or a flat tax, proportional tax, he was paying $5,000. Let's say now he has to pay $15,000 because higher income pays more tax. That's what we've got. The disposable income refers to the after-tax income, how much money he left over tax. So before he had 45, now he gets 55. In other words, he gets to keep 10,000 more. Perfect. We can calculate the average tax rate in both cases, fine. But I want to look at something more precise here. We can see that his income increased by $20,000. How much more tax did he really pay? And that's what we want to look at here. The change in income, well, his income goes up by $20,000. His tax, the amount he's paying, increased by, well, $10,000. The marginal tax rate refers to the extra taxes you pay when you have extra income. And in this case, it's going to be 50%. We can see it here. His taxes go up by 10,000, income's up by 20,000, 50%. Economists insist that it's the marginal tax rate that is relevant to people when they're making decisions. And just like the decision to take the metro or not is going to depend on the marginal cost. In this case, is 50%. So the average tax rate, which we can see over here, is kind of irrelevant. I mean, it matters overall, but in terms of making a decision about whether you're going to accept to work overtime, accept an increase in pay, it's the marginal tax rate. At present in Canada, the marginal tax rate at the high end are around 60% or so. It's around 60% that economists believe that it has very severe incentive effects. So, and it's happened in the past, in Europe in particular, and even in Canada, where the marginal tax rate has been as high as 80, 90, even over 100% in some cases, which clearly means that people are they're going to change their behavior in terms of working. I want to take a quick glance at this, a couple of more details about taxes in the context of Canada. This is data for 2009. Kind of interesting point here to consider is that there's data available of all federal tax forms filed. So population of 35 million people. There were about 26 million income tax forms filed at the federal level in 2009. Of these, largely 500,000 were people earning over 150. This is declared income over $150,000 annual income, and then below 150, we can see this. Now, how about the income collected from these people? And this is evidence of clearly a very progressive income tax system. It's about 30% of all of the revenues, income tax revenues collected from people, came from people earning over $150,000. 70% came from the people earning less than 150,000. Now, is this fair? I don't really know. Altogether, though, I should look at this in terms of the gross domestic product at the time. That would represent, I would imagine, somewhere in the area of roughly around 10 to 15% of 10% of gross domestic product. It's a significant part of of Canada's GDP. Something else I want to look at. This is more in terms of regions. There's about now I'm looking at data for 2017, the most recent data. We've got Canada, Quebec, Ontario, and Alberta. Amongst the files, 29 million people filed their income tax form in 2017 in Canada. What percentage of these people paid no federal income tax at all? That these are people that probably received a refund of some sort, but they paid no federal tax, and it's roughly around 30, roughly 1/3 of the population. And this is likely the adult population. 1/3 of the population pays no income tax at all. This is rather serious because, in my opinion anyway, it's rather serious because it means that people really don't care about taxes at all. Any discussion of fiscal policy in the terms of raising taxes, lowering taxes is completely irrelevant to them. And furthermore, they're quite in favor of increasing government purchases if that means they get something, because they, in some terms, have no skin in the game. This matters in political terms, and whether it's high, low, I don't know. But let's look at something else. In terms of regions, the amount of money collected in these different areas. In the case of Quebec, it's overall about 28 billion. In Alberta, with Quebec has about 2.5 times the population of Alberta. The federal government, this is only on income tax, collects more money in Alberta than it does in Quebec. Now, this is partly due to the fact that people in Quebec are poorer than people in Alberta. Rich people pay more, that's correct. But there's also a variety of agreements at the federal level in terms of how taxes are collected and so on. You can see it below here. The average amount collected in Quebec is around $3,500, and it's around over $7,500 in the case. This is on average. This likely will create stresses within the Canadian Confederation unless it's dealt with. It's not possible to. I mean, at present, the GDP per capita in Quebec is about one half of what it is in Alberta. That's stressful already, but to carry this into the tax regime is more serious, possibly. I want to take a look now at this idea of taxes in the context of is it better to borrow for a government or is it better to tax now? And I've discussed this, viewed this before as a future tax or a present tax, which is correct. But it's a little bit more nuanced than that. It's something to think about because we've often hear stories about, well, if the government doesn't tax now, it means that we're leaving a debt for our future generations. I'm not so certain about this because I literally think it's either a current tax or a future tax. And in actual fact, a future tax is a current tax. But let's consider this possibility. You have $1,000, or maybe your parents have $1,000. I'm going to assume, keep it simple, the interest rate is 14%, and that's compounded annually. Why 14%? Because money doubles after 5 years. I could change this, not relevant. There's something called the rule of 70, which is very useful sometimes. Just a quick rule of thumb. 70 divided by 14 happens to be equal to 5. So that means if I chose an interest rate of, say, 35%, the money would double in 2 years. If I chose an interest rate of 2%, the money would double in roughly 35 years. I'm going to stick with the 14%. Let's say the government has option A. The government could tax everybody $100 now. Spends the $100, doesn't really matter what the government spends the money on. That means you have a $900, or your parents have $900. Let's say they save the money. If they save it, put it aside, in 5 years, how much do they have? $1,800. And they can leave to their children $1,800, or your kids can get, if it's you. That's option A. Option B, the government instead goes out and borrows the $100 from foreigners. And the government spends the $100. I don't care, it spends it on something. As a result, now you have the full $1,000 that you had before. You save the money. You put it aside. After 5 years, how much do you have? 14% interest. It doubles. You've got $2,000. And in 5 years, the government taxes you the $200 to pay back foreigners. So how much do you have, or your kids get in 5 years? $1,800. It makes no difference whether the government chooses option A or option B. It amounts to the same thing. This is something that people don't quite understand about how government, is government different? Well, the fine print. If you want to look at this, look at it. When people say that they're leaving a debt to their children, well, all you have to do is put the money aside, that whatever the government is borrowing right now, put it aside and make sure that your children have sufficient funds to pay the taxes in the future. Does it matter what the government uses it for? That doesn't affect here because we're only talking about how they finance the purchase. Does it borrow from Canadians or from Canadians? Doesn't matter either, whether they borrow from Canadians or foreigners. Sometimes people talk about a foreign debt. It's more serious than a domestic debt. Doesn't matter. The one thing that we'll say is that in option A, it's clear who's being taxed. Whereas in option B, the government is going to tax, this is 5 years in the future, we don't quite know who the person is going to be taxed. The government may change tax policy.
Die Tauler ward gefunden mit nem Messer in der Brust.